Hi, I'm Jess Chen.
And I'm Johannes Munoz.
Welcome to the current issue of ISEA's Economic Snapshot. Today we are taking a closer look at the most recent labor market data.
According to new data from the Bureau of Labor Statistics, the United States job market continued its downward trend in November. While employers added 178,000 jobs in November, the previously released October data had to be revised downward by more than 20,000 jobs. This is substantially below the average job growth of the last 3 years. The year-to-date job growth is about 20% lower than last year, and the 3-month job growth for September, October, and November is almost 30% lower than last year. This map shows job growth across the US by zip code. Each circle represents a zip code. Larger circles indicate more workers, and dark green circles indicate faster growth over the past year. Yellow, orange, and red indicate job losses. As in the previous month, our employment growth map has turned to lighter greens, indicating slower job growth, and more reds, indicating outright job losses. Instead of deepening regional disparity in employment growth observed over the last months, we now see almost uniform slowdown. Some parts of the country still continue to grow steadily, but the number of large dark green circles, the hallmark of substantial growth, has faded. Many areas that have been shedding jobs for months continued to do so. They are the yellow or red circles. New areas have turned from green to gray and yellow, indicating that those areas are becoming stagnant or are now losing jobs. In the southeast region, most cities are posting strong job growth. Cities along the southeastern coastline as well as in inland areas are seeing moderate employment growth, some even strong growth with more than 5% over the year. The notable exceptions are again in Louisiana, including Lafayette and Houma-Thibodaux. These cities continue to shed jobs month after month. Given the prolonged nature of job losses in this region, this currently is the nation's most difficult job market. The Far West region continues to be the nation's job growth powerhouse. Almost all locations in the 3 Pacific Coast states post strong to very strong job growth. As such, this region has been a major contributor to national job growth during the entire recovery. Our sunniest spot this month is Hawaii. It literally represents itself as a green island with solid job growth all over the island.
To view other regions of the country, please visit our interactive map at www.icpublish.com/map. Let's look at those developments now over time.
This graph shows how many jobs the United States added each month from January 2005 until November 2016. As can be seen in the graph, since May of this year, we saw employment numbers downward trending. The most recent slight uptick is welcome, but is not able to clearly signal a trend reversal.
This video shows year-over-year growth rates over the course of the last year. Note the strong contrast of dark greens and few yellows and reds at the beginning of the animation. This indicates increasing disparity in job growth across regions. Parts of Louisiana posted strong losses throughout, while job losses in parts of Texas and the Appalachia region have slowed in recent months. Other cities along the coast, such as the West Coast and the Southeast, have not stopped growing in the past year, but at a slower pace more recently, which can be seen by the lighter green circles. Overall, the map has grown paler, reflecting both slower job growth but also decreased disparity in job growth across regions. You can view these animations by region on our YouTube channel, youtube.com/user/IC@Redlands.
This was it for today's Economic Snapshot.
Please subscribe to our news channel and our newsletter on the IC website to receive regular updates about your local economy.
Bye-bye.
Bye-bye.